Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Asian markets, the volumes are quite weak today.
Markets' fear thereafter was that there will only be sellers and no buyers.
There's a good chance that now the bottom will happen at the extreme end of panic also and fear also, and the put call ratio perhaps going to sub 1.
The concerns on NBFC because of IL&FS, I think there is a extreme reaction which is totally unwarranted.
Yeah.
Right now, mutual funds have enough liquidity.
11,155, 160 is the opening.
It tells me maybe this thing's a little worse than we're thinking for them to make such a joint statement.
Not defaulted, but there is not even a single day's delay, and this has been a long-standing unblemished history for the past 34 years.
We've reached, I think, that 11,000 odd mark on an intraday basis, so that's pretty important. A lot of stocks that were holding in the green, now they've taken a U-turn.
There is no recovery of any meaningful size. We're still down 160 points on the Nifty.
Yes, and now we're back to day's low. Honestly, been that kind of a day where you felt from morning that the market is in for some more punishment, and it's panning out like that. This is closing well. We're starting a bit early because it looks like one of those days. Hi Manoj, of course, with me is Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. What to say? I guess it's becoming a bit of a perfect storm, right? We have debt market issues, and then oil today hit 80, and then there are trade wars, and US and China are not talking. So, but I don't know, when there's so much of gloom around, does that give the sense that maybe somewhere the bottom is in sight?
Surabhi, one benefit of sitting in this seat, doing market opening, market closing, is that, one thing which you come to realize is that the market will keep giving you indications, the triggers will come later. The market will always move ahead of you. The market had already started to move. The big stocks had already started to fall way before, you had this kind of scare in the financial market, in the money market. I mean, now you know why, stocks like HDFC twins, Bajaj twins were correcting the way they were, and why, smart money was getting out of some of these stocks. I don't know, this argument that I hear is, about how much more can a Bajaj Finance fall, how much more can an HDFC fall. I mean, they're not God's gift to mankind. They are stocks. And if stocks go up, stocks go down. There's always mean reversion. That's happening right now. And financials is a bit of a problem right now. Of course, it's visible on the screen. Now, you're trying to attribute we need to stop attributing reasons to everything. It's a market which had run up a lot. It's now correcting. And now we're facing, of course, triggers, whether it's Brent at 80.3 or rupee at wherever it is. And frankly, from, say, last week to now, it's not as if, we've completely gone crazy on Brent, right? It was 79 something and 80 something. So, and we've seen 73 also on the rupee earlier. So it's just that a market which had over leveraged position is now beginning to unravel. This is expiry week, so the bears have all the momentum. There have been attempts to recover. All intraday recoveries, though, have been sold into. And that is the problem for this market, because right now the bear has so much ammunition, just needs some kind of rally, and that's the perfect fodder. You would want to short. And now, you're below the 10,950 mark. This is looking a bit like manic Monday, which is what I want about today in the morning, that if you thought Friday was bad, then, perhaps things are not done yet.
Absolutely. I mean, this is a lot of follow-up on the way down, right? And I guess, Anuj, the problem right now is that who is going to come in the way of this bear that's on a rampage right now? Because, I mean, Reliance is not holding, financials, the back has been completely broken. I think, barring tech today, any evidence that we might start seeing buying or even short covering somewhere?
And again, the limited point here, how much have we corrected from the peak? Before that, we had a big rally. Forget that. We have still not given up the entire rally from the July lows. So forget about anything else. For those who have seen the previous bull market corrections are sharp, vicious. They can last 10%, 20%. In the last bull market, we had 3 instances of even 30% correction. It's a different case that the third instance was the start of a bear market. And that's a different thing. So, corrections will be there. They will be sharp and vicious. They will be perhaps buying opportunities. But one more thing which has started is that this month in particular, we have started to underperform globe quite a bit. The MSCI emerging market and MSCI Asia ex Japan, we are underperforming both these indices, and the way big stocks are falling. And again, today, by the end of the day, if we see FI number and DI number which don't really explain this selling, it does not mean that, it's just speculative element which is leading to this kind of selling. There's something wrong about this market. The market is sensing it. I think 10,750 on the Nifty, which is a 200-day moving average. If you go there, there's nothing wrong with that.
Okay, I was just looking at the indices that Anuj was talking about. So MSCI emerging market from the peak is down 16%. We've fallen 8% with this fall, taking Friday and today into account. Anyway, that's the shape of things. Lakshmi Vilas Bank is making some disclosures with respect to IL&FS. We'll keep covering that and get you the latest on the debt market action of the day as well. Let's get started. Here's what's lined up on closing bell today. It's another day of deep cuts on the street. The Nifty and the Sensex see quite a bit of selling pressure. Those indices are down over 1%, in fact 1.5% now. The midcap index underperforms. Crude and rupee have been hammered down as well. Big blows coming in over there. We discuss all of these cues with Sanjay Dutt and Anant Narayan. So we get you an equity perspective as well as a money market perspective as we go forward. We discuss, of course, a lot of the fundamental cues that are coming in. NBFCs, what's the way forward? How do you play them? Tech stocks, if they should be on your buying radar. We discuss all of that with Deepak Shenoy of Capital Mind. Mayuresh Joshi joins in. Mr. S.P. Tulsian also joins in on the show. And, of course, market technicals. Jay Bala joins in on the technicals to give us a couple of calls on the indices. Also a dealing room check today. So let's just find out how volumes are. What are the institutional desks doing? Dilip Bhatt of Prabhudas Lilladher joining in. And as always, technical ideas and, of course, the technical setup of this market with Ashwini Gujral and Mitesh Thakkar.
Okay, let's kickstart the show. We have Sanjay Dutt, Director of Quantum Securities, now joining us on the phone line. Sanjay, hi, good afternoon. Thanks a lot for talking to us. I think you've had a bit of a break from television, so good to have you back.
Thank you, Anuj.
Your thoughts on the kind of move that's played out, specifically in financials?
This was kind of waiting to happen, and what has really struck us right now is this, unholy trinity kind of thing that's playing out. Combination of the EM currency route that's happening, along with oil that really hurts us at the wrong places, and then added to it the uncertainty that is there in the financial markets in terms of honoring commitments, like we've had this IL&FS incident, and obviously the fear factor that set in what NBFCs, CPs, etc., and also other liquidity issues, whether they would be honored or not. So combination of these three factors is really what is playing out. So which obviously answers your question as to, what happens to financials in most of these companies. I think anything that's straight at this point of time in terms of valuation is obviously susceptible to profit booking and correction, and would be a perfect target to build short positions on, and that's exactly what's happening in the last few days. But I think towards the end of the day, or probably tomorrow sometime, some amount of buying would emerge. May not be in the old names that have been in fancy over the last year or so, the HDFC banks and the Kodaks and those of the business, but maybe in some other names, buying would emerge, which are obviously facing the collateral damage.
Sanjay, afternoon. So Surabhi here. So the question is, do you think as and when buyers come back and some confidence returns, is the party really over? I mean, the NBFC party, will there be a clear shift once again back towards banks, or do you think that there is going to be cherry picking in some of these housing finance and consumer finance companies? Would you recommend that?
See, structurally, I don't think anything has gone wrong with this housing finance, the NBFC, and the financial services story in India from a longer-term perspective. It's just that we will see this bout of, correction, overvaluations frenzy, correction, overvaluation frenzy, which will go on for, 2, 3, 5 years. Whenever you see a structural kind of a run in these sectors, we've seen that. We have aggressive period of correction, and we obviously have euphoria coming back in after they get overbought. But I don't think any change in the structural position of this sector or the opportunity that is there in this sector. It's just that new names would emerge now. I don't have any positions, but something that comes to my mind immediately is if one sat down and realistically looked at the IDFC and Capital First combination that's in for a merger. And if you sat down and compared that with the valuation of something like a Bandhan Bank or something like an HDFC, and you would figure out where to put your money. And once again, I don't have any position in any of these, but I'm just giving you examples that we would have new names where money would start moving in, and then one would suddenly realize after a year or so that these are all sitters. So it's this process that the market goes through, and that is exactly what we're seeing now. Something that gets stretched beyond a point, it has to snap and correct, and then money has to move in somewhere else.
Okay.
So that's exactly what we are seeing. It is that it happens a bit too aggressively in our kind of markets because of various factors that come together, like the Trinity I mentioned. That's what is playing out. So I'm not too worried about what's really happening.
Okay. Sanjay, the other big talking point has been Yes Bank. Your thoughts? As we speak, its market cap is actually lower than even Bandhan Bank. Since you raised the topic, you think the market's worried that perhaps some skeletons would come out, or is this actually the best buying opportunity for a franchisee like Yes Bank right now?
See, without really commenting on the asset quality and the fact that I don't know anything about the asset quality, there has been, gossip and talk on the street about the asset quality. I really do not want to comment on it because I'm not privy to anything. Neither have I done a detailed analysis of the portfolio of Yes Bank. But unfortunately, this event has come at such a time when markets were ripe, particularly the financials were more than ripe for a correction. So this event of, the CEO and MD having to step down earlier than expected has kind of perpetuated or kind of magnified the correction in the bank. But I wouldn't be brave enough to venture out and buy Yes Bank at this point of time. I think there are much better propositions that are available in the market at this point of time. I would want the dust to settle down here. I would want to figure out what the succession strategy is, who's going to take over the bank. So let it play out. I won't mind buying it 10-20% higher and more expensive, but at least I'm more sure. If I have to buy something today in a good private bank, which I think has compelling valuation reasons to buy and most negatives have played out, I'll probably buy an ICICI bank, but not a Yes Bank. So that's not a qualitative judgment on Yes Bank, but that's because what I feel that the story is yet to play out fully in the entire Yes Bank saga.
Sanjay, finally, a slightly broader question. The emerging market basket fell about 16-17%. We were outperforming because we had a decent first quarter and decent growth numbers, etc. But now with the wheel turning quite swiftly, and we can go on into the number of factors. I mean, there is trade war, there's rupee, there is whatever's happening. Also, by the way, debt market factoring in an RBI rate hike. So I don't know, has the equity market factored that in? Is there a bigger correction that perhaps we are getting in right now?
RBI rate hike? No, equity markets have not factored in right now at this point of time. That would be another kind of setback and shock to the prices. But frankly, I think other than the rate sensitive, there are enough opportunities in the market to look at. There are many sectors where one can put money to work, where there are reasonably good signs of growth ahead in the next few years. So one doesn't necessarily have to focus on financials, which are obviously the first ones which react to rate hikes or any risk that is there in the financial system in terms of defaults or, re-rating of AAA papers, etc., what we are all talking about, rumors, and actually that's happening right now.
Sanjay, we leave it there. Thanks a lot once again for joining us after a bit of a hiatus, and we look forward to talking to you more often from now on. Before we take a break, I just want to pull out the intraday chart of Brent crude. That's 80.5 now. 80.55 is what we have. It's a decent move for a commodity. 2.5% higher is what you have on Brent crude at this point in time, and that's a bit of a negative correlation that, of course, we have between crude and financials back home. So that's, of course, also the other reason. We'll take a break. Up next, we'll address the other moving part of this equation.
We've got your view on equities. Let's actually just look at what's been happening in the debt market as well, because that's pretty much the genesis of this round of the fall. Quick points here. The rupee has scaled back a little bit from the highest levels of the day. Bond markets, the yield is around 8.11, 8.12, so yields continue to be elevated. Those are, of course, the rates for you at the moment. What one is hearing, and when I spoke to a couple of debt fund managers as well in the market, today we're not seeing too much action in the primary market. Primary issuances, people have taken a backseat because of one of the sentiment and this volatility that we've seen, and then the seasonality factor because it's quarter end. So typically money moves out of mutual funds, so they're not big buyers at this juncture. So therefore things are a little lull. There is a bit of a lull, but there's a lot of unease and sort of nervousness. And what one does understand is that yields even on AAA rated PSU paper, those yields have shot up to about 9%. Some deals happened today at close to the 9% mark. That gives us a sense of the tightness in the money market. Well, let's just take that conversation forward with Anant Narayan, professor at SPJ IMR. Anant, thank you so much for joining in. So it's all happening. We are wondering what the next cue from your side of the market is going to be. But first up on just the sort of liquidity conditions as of now, was Friday really the worst in terms of fear psychosis? Do you expect things to settle given what RBI, SEBI, etc. said?
Well, it does. Friday wasn't pleasant, and frankly, one comfort we were drawing was that your markets, the equity markets, were kind of holding up all this while. But if all markets start to fall again, paying the force. Look, things are kind of looking brittle in the markets, and I guess across the entire financial services space. And it is ripe for panic reaction. Now, the good news is, the statement which came out from SEBI and RBI yesterday clearly gives the confidence that they're watching markets very closely. For them to make a statement jointly on Sunday, which means they're working on Sunday, is kind of significant. And I think we have enough ammunition between its debt markets and, for that matter, mutual fund markets as well, to ensure that things don't go out of hand. Look, the overall situation is that we still have a problem on financial stability. We have a problem on the external sector. We have a problem on the financial services sector with NPAs and so on and so forth. We need resolutions to happen. Short-term panic, however, we should be able to manage.
Okay. Anant, hi, good afternoon. It looks clearly visible, going by the price action of last fortnight, that 73 is that pain point for the government, perhaps, or the authorities, as far as currency is concerned. Would you agree? Do you think that's a level which again should be defended on the rupee?
I think it should be defended, Anuj. Yes, they did show that as a pain point earlier, and we've already seen 13% of depreciation this year. Now, it's all very well to say that we still have room to go on the real effective exchange rate, but beyond the point, the pace of change can actually impact the fundamentals, so it's not good news. So, and plus, given we have $400 billion of reserves, even if oil is close to the $80 mark, we have room available to manage the short-term pressures. Okay. So I think, yes, the steps should be taken, and there are steps which can be taken, both use of reserves as well as things like the oil window to ease the pressure on the currency market.
All right. Anant, we leave it there today. Thanks a lot for that quick take. That's the view from Anant Narayan. Now let's get back to equity markets. Mixo Das, Asia Equity Strategist at JP Morgan, is with us. Mixo, hi, good afternoon. Thanks a lot for taking this call. Your thoughts on Indian market?
Yes, good afternoon.
Very severe underperformance over the last 10 days compared to the globe.
Indeed. Absolutely. India was relatively insulated all the way up until early September, right? And that performance is now coming under a little bit of question. So I would say India is essentially caught in cross currents of a variety of global developments where, looking at stuff like trade frictions, which has been weighing on Asian equity markets quite a lot, hasn't really impacted India so much. So India, as a relative outperformer, was looking quite good until recently. But now we're starting to run into a place where valuations don't have a lot of upside. Current account deficit remains a problem. The currency is one of the worst performing among major markets. There's been some volatility in the financial sector. But I think really from my perspective, the biggest near-term risk remains oil prices. And with what we're seeing in terms of the sanctions, the US sanctions on Iranian oil being exported, if that really continues to tighten the oil markets as we expect, then we could easily see Brent oil going up to $90 a barrel in the near term.
Wow, so that was going to be my question. What are you sort of penciling in? So you are looking at 90 on Brent. Now, I don't know, is it factored in? I guess it's not factored in the equity valuations and prices as of now. So more downside then for India?
Yeah, I mean, so at current valuations, India is still trading at 18 times forward PE, right? It's the most expensive market in the region, still trading at one standard deviation above its long-term average. So, while we do like the market from a medium-term perspective, especially in light of these trade frictions, the near-term outlook remains quite clouded. I think with the oil price volatility, we do need to be a little bit more cautious. So our oil price forecasts were just revised up recently, going up to $85 per barrel in 4Q, with some possibility of a spike up to 90 or even higher in the near term.
Okay, Mixo, the other thing which we have seen in our market is a bit of a portfolio shift. It had started sometime about 3 or 4 months back, but it's now very visible. A shift from financials into IT. But you reckon even that trade might be getting a bit overcrowded now?
Yeah, so I think this is directly a result of the currency depreciation, right? So which is very positive for the exporting sectors, but not so positive for the financial sector. So that's as long as the currency continues to be under pressure, this portfolio rotation makes sense. But really, from our perspective, if you start to see the Indian business cycle kind of stagnate or slow down from here, you should be starting to see some rotation out of growth stocks and into more towards quality stocks. So that's something we haven't really seen in the Indian market yet.
Okay. Mixo, how much of a concern are local developments with respect to the financial sector for you right now? Because what we've seen is a major derating. I mean, there's worry about defaults at one particular non-listed institution, but they have listed sort of subsidiaries. So the IL&FS issue, hardening of yields, and the sell-off in financials. How do you view this?
Well, I can't really comment on individual stocks, but looking at the sector generally, we remain constructive on the financial space overall. What the RBI is doing is really long-term positive. We're seeing them become perhaps a bit more active in terms of the regulatory policies. So this could lead to slower growth and faster write-offs in the near term, but it's definitely a longer-term positive for the sector as a whole. So higher cost of funding is definitely weighing on some of the NBFCs in the near term. But again, if you look at global investors, bond investors, Indian bonds from a long-term perspective, again, remain attractive for them. So I wouldn't expect this situation to last for an extended period of time.
All right. Mixo, thanks a lot for taking this call. Just look at a couple of more stocks. I think the one that's really taking it on the chin now is REC. I mean, if this report is right, and if they are forced to buy or told to buy, I didn't put it that way, PFC, in that case, of course, PFC's asset quality is far worse than REC's. REC's itself is not great, but PFC is even far worse. And that's why today the markets got really nervous. PFC, of course, is in the, has not underperformed. It's the one which will get bought, but REC is the one where there's going to be a lot of pressure if this report is right, and that's the stock where you're seeing about 8% decline right now. But the bigger problem is crude prices. There's a good chance tomorrow morning petrol might cross 91 in Delhi, or at least 90 half, the way things are moving. But anyway, let's move on. How should you position yourself in this last hour of trade? Ashwini Gujral and Mitesh Thakkar now join us with closing strategies. Good afternoon. Ashwini, it's 80.8 already on Brent crude. But your thoughts on how to approach the rest of the trading day, last hour, and what about stock calls?
See, first of all, 10,950 is some kind of a historical level. But the issue is, the way crude has moved up from $80, like in a half a day, you're almost at 81. So if, trends are going to get stronger in things which are, contrary to our market's up move, then things will continue to get difficult. So even now, I would say you can get short on Bank Nifty, Nifty, etc. And chances are you could get 100 points by the close, or maybe even if we don't get something today, tomorrow definitely that should happen, because the way crude has moved, maybe you could have $2-3 of a strong run from here. So the market is likely to price that in. And now, 73 will not be easy. You can try to defend it, etc. because the market is consolidated, and the next move from here could be easily 74.50, 7,500. So given the strong momentum on the downside and macros which are turning against, I don't think you will get substantial rallies because there is no confidence, and everything needs to reverse before a tradable upside happens. Having said that, REC is a sell with a stop of 102, target of 90. Bharti Airtel is a sell with a stop of 354, a target of 340. And NIT Tech is a buy with a stop of 1235, target of 1280.
Okay, Ashwani, you meant 9400 to 9500, right? On the Nifty.
10,950.
No,
from where?
Breach of that. After a breach of that. After that.
A breach of that will take you to 10,500, 550, where there is a lot of support that happened.
Okay.
So that is a very real possibility. Then we need to see from there where is crude, where is rupee, etc., etc. But these, last 1,000 points have been taken out because this was a bit of a frenzy, and that generally happens that the first correction tends to take that out.
Okay, wherever they might be, crude, rupee, bonds, they're definitely not going in the direction that the bulls would want them to go. They're absolutely moving in favor of the bears for the time being. Mitesh, good afternoon. Thanks for joining in. So it's yet another down day. Midcap index is down 450 points as we say hi to you. Your reading and calls for the last hour.
Yeah, good afternoon, Surabhi. I think it's clearly, a market which is basically can be divided into people affected by or stocks affected by rupee and crude oil. You can see, I think, IT stocks doing well, though pharma today is not doing well, but I think overall, I think the sector has been outperforming as such. So I think that kind of trend might continue given the fact that these are the two strongest macro affecting the markets today. For the timing, I believe that, and I have a very similar targets to what Ashwini mentioned. I think I was working out on what possible lower side levels which you can see. And the two levels which stand out are 10,820 on the Nifty and possibly 10,600 about 650 as the next level. So closer to about 10,550 is what Ashwini was saying. I think very similar. I think good support exists over there, and there's a good chance that we might eventually, with some choppiness and volatility, reach those levels in the next 2-3 weeks. Having said that, the two stock calls I have right now are a buy on HCL Tech with a stop at 1,088 for targets of 1125, and Steel Authority is a sell. Keep a stop at 75.5. Look for targets close to about 70.
Okay, those are some technical calls. The biggest index loser today has been Mahindra & Mahindra, which is down about 6.5%. So today, of course, the market's in no mood to, care for any reputation. SP Tulsian of sptulsian.com and Deepak Shinoy of Capital Mind now with us. Good afternoon. Mr. Tulsian, the way M&M has fallen today, you reckon could be an indication of this market being closer to a bottom? Now, people selling even the best of the lot, the outperforming stocks?
See, Anuj, first coming on this, all quality stocks getting sold, whether you talk of Bajaj Finance, whether you talk of Mahindra & Mahindra, Maruti, or maybe Asian Paints, Godrej Consumer, Britannia. In fact, in all these cases, largely the combination of two factors. One is the liquidation, the margin, the losses of the traders in the F&O are getting financed by this, because retail traders, retail investors, what he does, he accumulates the small quantity of all these stocks, thinking that he is building up his portfolio of the quality stocks, which all gets just liquidated in a day on the F&O losses. And second is the mutual fund redemption pressure. Let's accept that the pressure is definitely there. Who all are holding these stocks? Definitely the mutual funds, the bigger ones, And we are going to, I'm not talking of the debt funds, because both have a separate window, a Chinese wall. Debt fund has nothing to do with the equity selling, but in the equity mutual funds, we are definitely seeing the redemption coming in, and that is in fact seeing the pressure building up. But yes, maybe in fact it requires stability, and generally whatever experience I have, on the market from this all weakness point of view, once if you don't see these things coming in the stability, probably that should end with the expiry, because the moment we see the whole series has gone negative. In fact, maybe in the second half after the advanced tax, I was expecting that probably market should stabilize. Maybe the first half was seen to be negative ahead of advanced tax numbers and all that, but it has not panned out in that way. In fact, maybe because of the good advanced tax payments, the liquidity crisis has come in the market, because of the huge, large amount having paid. So maybe with the expiry on Thursday, probably you should see the bottoming out happening. But unless until you have the support of the macros, in which the more especially it is the crude, if it keeps moving up, then I don't think that rupee will have respite. It's a spiral effect of the crude. If crude starts moving up, then rupee also starts becoming weaker. So again, let's hope that all these things bottoms out by Thursday, but otherwise if it doesn't happen, then it's very difficult to take a call. So first thing, keep an eye on the mutual fund redemption, and second on the crude, prices going forward for the next 2 or 3 days.
Okay, all right. By the way, there is some movement now. Let's pull up the intraday graph of Reliance Industries, and there's and also on the NBFCs, by the way, including DHFL, India Bulls Housing Finance. I don't know, Anuj, if this is some shorts that are trying to take profit. On Reliance, that move is quite interesting. I mean, Reliance is now beginning to show some sign of life. Not that it's done much, but at least from the low, some of these stocks are spiking now.
Yeah, I think perhaps the low for the day has been made, Surabhi. So 10,950 was that level. That's acting as a big support, and the market's bouncing back a bit. Yes, and on NBFCs, both the beaten down ones, they are seeing quite a bit of bounce. DHFL for sure, but that's been the case since morning, and India Bulls Housing as well.
But just one more point, Anuj. I remember on Friday when we were discussing this, Friday was the day when buyers were still coming to some of the better quality stocks. I remember that buying on Page Industries, for instance. But today, whether you look at a Motherson or you look at the entire FMCG universe, Dabur, Godrej, I mean, nobody's kind of queuing up and knocking at the door today.
Motherson's fall is very interesting today. That one is not down about 9%. I think that's more global in nature. I think currency move, what's happening with trade war, all that stuff, that could be moving the stock. So 8% lower. In fact, I wanted to take Mr. Tulsian's thoughts on this. Mr. Tulsian, this is a very crunching fall on Motherson Sumi now, 252 on the stock.
That's right, Anuj. In fact, it is very surprising. Maybe, again, people have started talking of the slowdown in the Europe and all sort of things because of the trade tariff war. And if we see that effect, if we see that things coming up, then, you have the Motherson Sumi taking a big beating because of their strong Europe presence and, exporting to many countries and all that. But yes, it's indeed very surprising. Yeah.
Okay, by the way, there is some positive news coming at the bottom of your screens. These are sources telling us that Oryx could be looking at increasing its equity participation, not in the IL&FS group company, the holding company, but maybe in an individual project. This is an energy project that IL&FS has. So maybe at an SPV level, maybe they want to come through as a bigger partner, but not at the holding company level. That was an earlier report in one of the newspapers, but now we're getting independent confirmation from different sources. So we'll get you more on that story as we go along. Deepak Shenoy of Capital Mind is also with us. Deepak, are you buying DHFL? Are you buying Bajaj Finance? Are you buying any NBFC?
Well, we are actually, we are actually quite excited by the fact that a lot of them have fallen to better levels. Bajaj Finance has finally come to a point where I might be able to justify a little bit, in terms of the PE ratios and the growth they have. I feel this crisis is a twofold issue. First, IL&FS is a debt crisis, which will impact certain NBFCs, but overall, all of them are fairly comfortable in terms of the liquidity challenges going forward. Their NIMs will come down a little bit in the short term. In the long term, they will be able to make it back up. That's what my feeling is. So we're interested in Bajaj Finance, in maybe a Shriram Transport, even in a Manappuram. I know that they've been beaten down quite a bit, but when they're beaten down, perhaps that's the time we would be more interested in buying them, and then when they're flying high.
Okay, before we take a break, Mr. Wilson, your thoughts as well on this story that Vyas flashed about REC buying the stake in PFC?
See, Anuj, if you take this as a concept, it's a very good move of consolidation, because if you really see, there is no reason for the two dedicated power financials to exist. But if you really take a call, sometimes I wonder whether the financial wisdom really prevails in taking such call. Because if you really take that, I agree that PFC has a bit a problem of the asset quality, but let's not forget that 82% of the book of the AUM of the PFC is to the government companies, which are not going to see any kind of asset quality issues. Now, of remaining 18%, 11% has been provided. But my point is that if you see the absolute financial working in terms of income and the bottom line, that is PAT, in fact, that is higher in case of PFC. PFC is a slightly 20% bigger company, and in fact, in PFC, government is holding about, if I'm not wrong, 67-68% stake, while in REC, government is holding 58% or 57%. market cap of PFC is a bit higher, maybe at about 21,000 crore, while REC having market cap of 19,000 crore. So I don't understand sometimes that what is the logic of asking REC to buy PFC. It is only because REC is ruling at a higher share price. I don't think that, and if you see these kind of financial indiscipline coming in case of the mergers, obviously the price of that stock gets corrected. And in fact, I have been saying this for last couple of weeks that I don't see any reason for the differential between PFC and REC to exist. At one point of time, this difference was seen as high as 40 rupees. So I think maybe this fear of REC asking to take over 66% stake of the government, may have led to this this correction in REC, which otherwise also was due. Because at one time, if you see, even PFC was the nodal agency for the ultra mega power project. I'm not talking now that has ultra mega power project concept itself has got killed and has not worked. But if you see the overall size, I think the wisdom should have been more of REC being taken over by PFC. Forget the asset quality, that's just a matter of time. So I think the correction which we have been seeing in REC was due, and this has been used as a trigger for making the REC share price to correct.
Still a challenging afternoon if you are a bull or if you want to be a bull in this market. 150 down on the Nifty, that's how the reading is. So there is an attempt to now get towards the 11,000 mark once again. Let's see if that is successful. Sandeep Wagle is with us, so let's get some more trading ideas going. Sandeep, good afternoon. What are your bets for the day?
Afternoon, Surabhi. I would go with a sell in a Manappuram Finance, stop loss of 81, target 72, and a buy in a HCL Tech, stop loss 1089, target 1125.
Okay. Sandeep, thanks a lot for those strategies. That's some fresh technical calls at this point in time. Well, the other interesting move today has been on IGL. Just pull out that intraday chart on IGL. That's up about 3% in a weak market. Of course, IT has done well, so that's the other important part of the market. Deepak, your thoughts on a stock like IGL? If you've tracked it, it's made a move today.
I haven't tracked IGL, apologies. I know I used to track it earlier, but I don't have any current data.
No problem. What about the oil and gas space, Deepak? Because it's very interesting the way ONGC has moved over the last couple of days.
I think two things here. I think one, you got the upstream, the crude oil focused companies like Oil India or ONGC, where I think value builds up based on crude prices as well. So there is that impact. Plus the dollar going to 73 has a positive impact on it. However, from the oil marketing company perspective, also there's an interesting play over there where we feel there is a value because from there they're able to pass on, right now at least, all of the input price increases to customers. Surprisingly, the little bun that we had or something like that fizzled out very fast. So I think people are willing to pay higher prices, and it's not so much of a complaint. So you got companies with 40% returns on equity being able to play that space. So interesting space here, although it's very debt heavy. You have to be a little careful over there, but some companies like ONGC are obviously more, are less impacted by debt. I feel potentially once this crisis dies out, there's going to be a play in here as well.
All right. By the way, there's some flashes on the screen that our colleague Sapna is sending us from Delhi. So the government has finalized a list of commodities for import tariff curbs. It's unlikely on gold, which is what the agency had also reported earlier, but it's likely on certain types of steel, electronics and precious stones. So steel is the sector where, of course, there's likely to be some kind of move. So perhaps we would just want to see the intraday moves in names like JSW Steel and Jindal Steel and Power. These are the ones where there's a bit of a domestic issue and they normally move from the low point. That's JSW Steel. Let's pull out Jindal Steel and Power as well. Okay, that one's making a bit of a move from the low point. So that's a bit of an information that we have right now.
Yeah, well, that's the information coming in. Rupee hasn't reacted too much because perhaps it's already factored in. This has been an ongoing discussion for a while. So the currency is still around that 72.59.60 sort of a level for the time being. Mr. Tulsian, your thoughts on a stock like Tata Steel, because the commentary that we have been getting is fairly bullish in terms of just the prices, and I believe there were some price hikes in August as well. But in this kind of an uncertain environment, is there any point trying to play the metals, specifically the ferrous theme?
See, we have been keeping positive on ferrous steel, and in fact, if this import tariff items likely to get announced are going to see the inclusion of the steel items also. I'm referring ferrous because China will be definitely desperate. They will cut the prices, and because they will be having the closure also ahead of that winter closure, and this time it is likely to be quite long. So maybe from inventory clearance point of view, because the closure of the steel plants will start from October, which this time is going to last maybe till end of February, which otherwise comes to an end in the end of or middle of January. So maybe that will be seen quite positive for the steel stocks. But in the morning also I've said that on Friday we have seen the GDR of Tata Steel falling on the global exchanges by about 6, 7, 8%, and the stretching of the balance sheet with the loan having crossed about 1 lakh crore and the kind of acquisitions they have been going for. I'm not saying that the acquisitions or the inorganic growth move is not seen to be good, because they are acquiring the Usha Martin steel plant of 1 million ton special alloy steel. So that is all seeing the pressure. Probably the things may get, integration may happen in the next 12 months. Till then they may be having the pressure on the margins. Also taking all this into consideration, my preference will be more on the JSW Steel and Steel Authority, and maybe third in the pecking order will be Jindal Steel and Power.
Okay, Mr. Semvi, thank you on that note. In fact, Deepak, thanks to you as well for joining us. The stock that's now at the low point of the day is, by the way, Tata Motors. Just pull out that stock intraday. That's making fresh lows right now for the day. For the day, of course, 241.25 is what you have. Jay Bala of CashTheChaos.com is also with us on the show. Jay, good afternoon. Are you buying the Nifty right now?
I'm not. I'm doing some risk management at current levels. See, basically, the index has done something pretty interesting. My bullish view on the markets was predicated on the market not printing the Karnataka results day high of 10,929. The Nifty spot has actually printed that, but the Sensex as well as the Nifty futures is comfortably holding above those levels. So what I'm doing at current juncture is that I'm treating this as a larger degree correction and anticipating some level of something like a low below March 2018 low, something around the ballpark of 9,700. So that is the worst case scenario I'm working out with, because when you work with the worst case scenario and you have a surprise, that's the way to control risk in the market. So I've got some puts below around 10,500 marks as a hedge, and the bulls haven't actually given up. In fact, if the markets are able to print 37,775 on the Sensex without breaking the Friday's low, or 10,395.85 on the Nifty without breaking the Friday's low, I think this is a bad trap. But you can't bank on that. You got to prepare yourself. You got to be hedged. You got to do some risk management at current levels.
Okay, Jay. Good afternoon. So you're saying 9,700 worst case scenario is a possibility. How are you looking at these big financial stocks? HDFC Twins, Bajaj Finance, Bajaj Finserv. What should one do now with them?
Yeah, it's a very diverse pack, and Bajaj Finance is looking better than Bajaj Finserv. HDFC is looking better than HDFC Bank, and on February 19th, I was on CNBC-TV18 and said Bajaj Finance is a buy. At the time, the market was hating it, and I said it will go to record highs. It went to 3,000 from those levels, and it's not brave at this point to stand in this type of market, especially in financials. We let the market settle down, let some stability come through, and then we think the private sector space like HDFC Bank, ICICI and Axis will do pretty well. They even have a good chance of clocking fresh record highs even from current levels. But it's not brave to stand in front of the market. What is strong in this market at current juncture is Pharma. Pharma's pullback is a buying opportunity. IT is a buying opportunity. These are no-brainers. Everybody will be telling you this. But there's something else that's interesting that's happening. Watch out for base metals. A BSE metals index that's just warming up. If the markets is likely to do what I'm trying to do, I think going to have a very strong rally in base metals. But do some risk management. Don't allocate normal levels. Allocate some 20 to 25% of your normal allocation.
You said IT. That's had a big rally already, Jay. Because if you look at the IT index, I think it's outperformed. It would be among the best performing indices in the world if you take the last 1 year. Thoughts on what next here, and any IT stock that you like at these levels?
Yeah, the CNX IT index has a pending price objective of 18,000, and coming to specific stocks within the space, I like Cyient at current levels. I think if you place a stop below 680, I think the stock is heading for 900. There was even a possibility of 1,000, but given the market where it is at this juncture, I'm lowering my price objective and keeping it at 900. And even sugar sector is actually looking good. If you look at the international sugar prices, the August low was pretty important. I don't know if I told this last time when I was on air, but the sugar 11 futures is heading for 15 cents per pound of sugar. So that's looking pretty interesting. So I have a pick there also. Praj Industries is looking pretty interesting. Even Dhampur Sugar is looking interesting, but I went for Praj because the risk there is lower. One can place a stop below 85 and expect 150 in the short to medium term.
Okay, sugar is looking interesting. IT and pharma. Specific stocks, pharma, are you looking more at some of the non-index names like maybe a Biocon or Glenmark, or would you go with the leaders, your Sun, Dr. Reddy's, Lupin, etc.?
Dr. Reddy is looking pretty strong, and I will actually go with the non-index stock, Glenmark and Biocon are good, but Biocon has had quite a bit of run-up, but I had a price objective of close to 750 to 800 for it. I think that the upside is there, but it's not as attractive as it is in Glenmark. I've been saying since May that Glenmark is a three-bagger, and it's done a decent correction in the last few days. I think from current levels, I think it's likely to make a quick move to 750 to 800, and I haven't revised my price objective lower for any of the pharma stocks, but it's better off being in the frontline names. If you want, if it gives you comfort, you can book profits in the pharma stock and reposition yourself when the index stabilizes.
Okay, Jay, we leave it there. Thanks a lot for joining us today. The stock that's making a big move right now is Infibeam. Just pull out that stock intraday, and that's hit a 20% circuit. I think it's a 20% move that you're seeing on that stock right now. So big moves right now on some individual names. Let's do one thing. Let's go across to Nimesh now. He's stepped on and in fact gone across to the Prabhudas Leeladhar headquarters, and he has Dilip Bhatt with him. Nimesh?
Yeah, hi Anuj, thanks. Yeah, so actually I'm outside the dealing room of Prabhudas Leeladhar, and joining me now is Dilip Bhatt. Dilip Bhatt, thank you very much for talking to CNBC-TV18. In a hectic day for the last 2 days. Today again we've seen a lot of panic selling. What have you made of the last 2 days of move?
Well, I think, Nimesh, the very fact that you used panic, that itself sums up everything. Right. It has been panic, of course, without any doubt, in a very undiluted way. And I think what's really happening in the market is that some rumor has given cause to this kind of panic in the market. But then once the panic sets in, I think typically it just feeds on itself. And we have always seen that whenever this kind of panic happens, the logic takes a backseat, and precisely which is what is happening. Because we have seen quite a few of the companies have gone back to the credit rating agencies. They got their ratings reaffirmed. So some of those things are being addressed and they are being corrected. But somewhere either the market knows something much more, and which is what is causing the panic. That could be the other interpretation of this.
Okay. Dilip Bhai, you've seen so many of these bull cycles and bear cycles in your history. What is this correct connection telling you? Is this a good opportunity to buy, or do you think there is really something wrong which market is not understanding right now, and it will get punished more?
So typically when panic happens, it's very difficult to say where it's going to settle down. But still, according to us, possibly it will take another, Nifty can come down by another 150, 200 points, not impossible to imagine. But if you are a longer term investor and possibly ready to overcome the journey of those assembly elections, the central elections, and looking for 12 to 15 months, I think this certainly would be the time to buy at on a very selective basis. And maybe you can do a kind of an SIP in your investments spread over next 12 to 15 months.
Okay, I'll ask you what stocks to buy. But first, the big center point of discussion has been the NBFC stocks. Given that there is a liquidity crisis, given there is this whole IL&FS hangover on the markets, what is the general sense on the NBFCs and housing finance companies at this point in time?
So, well, I think that overall NBFCs are going to face a cost increase with Fed rate hike and the way the oil price is going up. And even India's central bank also has to raise the interest rates. But having said that, there's nothing really what we have understood is something that should result in a big panic. But still, having seen this panic, I think this NBFCs and certain select banks offer a good opportunity that you should go for certain well-known names at the moment, because they too have fallen off the cliff, and there's a waterfall decline in their prices. So I think we should look at some of those frontline names and still try to see that whether you can ride them.
Okay. Are you hinting towards HDFC, especially HDFC, because that's been the blue chip of the blue chip within housing finance companies? Even that stock is corrected 5% today. So within the housing finance companies and NBFCs, what would be your pecking order?
So I think the way Bajaj Finance has come off, the way HDFC has come off, the way some of these private banks also have come off, I think they offer a good opportunity for one to really buy. So these two names certainly stand out. I would say even Mahindra Finance, because nothing really has transpired which is really going to be a game changer for them in terms of their performance. There could be some small here and there, but by and large, I think they are still going to show a very solid growth.
Today, the other big surprise came in the auto names. A lot of the auto stocks are down 7, 8, 10%. Maruti is at a 52-week low. Motherson Sumi is down 8%. So is the case with Eicher Motor as well. What's gone wrong with the auto stocks in today's trade?
So as a part of the panic, I think one should not forget the way the markets have come off. There is bound to be a good amount of margin calls, which is going to get triggered at various brokerage houses. And possibly we also hear that some of those unwinding in the auto space particularly is happening at the moment. The second feeling, of course, is that with the cost of borrowing going up, possibly, the cost of buying your cars or maybe even the passenger vehicles or even the CVs, they are all going to go up. So maybe there is some fear also at the back of the mind. But at the moment, all those things are really getting hyped, magnified, and which is what is really resulting in this particular situation.
Okay. We spoke about stocks which are down, but one sector which has really done well is the IT names. Even today's in today's trading, the likes of TCS, Infosys, all are doing good. Is most of the IT run pretty much priced in, or do you think there is still a rupee tailwind which will help these stocks to go up?
So typically, I think what we all know that people always try to find a hiding place. Right. And with rupee providing a solid tailwind, I think IT is really providing a good hiding place, and maybe to some extent even pharmas. But still, I think in IT and pharma, there is we don't think that there is a secular story really building up in a big way. So I would say it's more of a hiding place and more of trying to give a protection to your portfolio and providing resilience to them. But otherwise, on a secular basis, it will be very difficult to recommend IT stocks at these levels.
Okay. Dilip, the one leg of this Indian big rally is the domestic flows. You've seen solid inflows into mutual funds. Is that now getting questioned? Are you getting a sense from the dealing rooms that you spoke to that now even the DI seems to be a little reluctant in buying, or the inflows into the mutual funds are going to be tapered off because of this big sell-off that we've seen?
So we have seen that the DI flows have slowed down into the mutual funds. So in turn, that flow has reduced, as what we saw the intensity was pretty good earlier. Whether now this will cause a temporary aberration, possibly yes. I think without any doubt, at a time when there is so much of panic, protection is the key word, and so people would shy away from the equity for a while. So there could be some reduction in the flow, but we have seen that the monthly SIPs still come in a very strong way, and which is a very sticky and a long-term money. So I don't think that is getting impacted so much, and which should help the market in a way. So I don't think that on an overall basis, it's going to come down in a secular way. Temporary aberration can happen.
All right, Dilip, thank you very much for talking to CNBC-TV18.
Always a pleasure.
Anuj, back to you.